In this video, we'll be talking about the short-term life cycle models chart. This chart will come with two windows. The left window will be referencing the 20-minute time frame. The right window will be referencing the 2-hour time frame. For anyone not familiar with this chart style, this is just a high-low chart. It's just representing, like, each candle is just representing the highs and the low of that time period. It's not showing the open or the close. And you can change that with this button right here to whichever chart style you want. There are a couple components on this chart. Some you may recognize, some you may not. Some you'll have access to, some you won't. It just depends on what level of membership you have in my groups. The private indicators that you may not have access to below are the cyclic smooth RSI and the correction strength meter. These two are available for purchase, or if you're part of the indicator group already, they will show up on your chart since you have invite access to. If you don't have those, then it'll show up as a blank bar, like a blank segment on the screen. These two aren't necessary, but they are helpful for added confluence. Another part of the private package is the overlay that's associated with the correction strength meter, which plots these trade entry signals and targets and stop losses and things like that. That won't show up if you don't have private access. The VIDIA, which is an adaptive EMA, there are lots of different versions of this in TradingView. I'll link to the one that I prefer if you wanted to add it onto other charts you have. And I also do have a private version of NVIDIA in my indicator package as well. There is also a free version of the Cyclic Smooth RSI that is available for everyone. It's titled Privacy Smurfs RSIs. I'll also link to that in the description. The last and final part, and the most important part of this chart, is the actual cycle model projections. Though there will be a minimum of 3 per each chart. You can see those in different colors here, here, and here. How they are added is at the end of each exchange day. So in a 24-hour period, I will calculate the cycle projections for that day and plot it to the chart. So the way to identify the most recent cycle model is looking for the turning point where the color changes from gray to whichever color is represented by that particular day's cycle. So the oldest projection at the moment is currently this orange one. The next one would be the blue one, and the final one would be the green. So this would be the most current cycle projection. The days don't necessarily matter so much. What I'm doing is I'm trying to find confluence between each different day's worth of data. Ideally, I'm looking for alignment in a bottoming period or alignment in a topping period. So if, like, as each day comes in, new data is presented. And if new data presented over a series of days is all still saying the same thing, then that's when I want to be looking for a technical price action based signal to enter into, like, a trade in the direction that is being indicated. There's one difference between the 2-hour chart and the 20-minute chart. The 20-minute chart will have this thicker yellow line. What this is at the end of each day, I will add in a 20-minute cycle chart. And then when I wake up in the morning and I'm getting ready to trade for the day, I will run a new scan at, like, the beginning of the day and add that to the chart. So the thicker yellow line is the beginning of the morning each day, and then the thinner ones are the end of day data from, like, the past 3 days. So this gives me like a little idea of how the market is like gearing up for the day in contrast to like the end of day fixed data. One element that will occur at times is chart syncing of the time range windows. At times I will include the higher time frame windows on the lower time frame chart, so you can see how I have the cursor synced up and it will move on both charts. So you can see this range here corresponds to this range right over there. I won't have the smaller time frame plot on the higher time frame because there's less impact of the smaller time frame on the higher time frame. Occasional instances where I will do that is when the smaller time frame syncs up to a window on the higher time frame to maybe pinpoint a region better for your timing signals. I think the most important thing to remember when you're looking at these cycle projections is that they don't represent price. So the model's plotting up here near the 1340 region does not mean that prices are expected to run to that level. The scale on the charts are just like they're subjective and they will just match, whatever scale I have on the price chart. So they will move as the price chart moves. So you can see here that like this same level before, which was at 1340, is now at like 1600. So the scale is linked to this chart over here, which will change over time. So this does not represent the price that is expected during any rally or whatnot. All they represent is influence on price. So like during this point in time, like all the cycles here are sort of bottoming and going back and forth, and that means that there's not really any good directional influence on price, where during this phase here we have a bullish influence on price structure. And another thing on top of that is that the same thing that is present here on this chart will be present on this chart, just in a lower time frame. So during this phase here, like during this upwards phase here, there will be multiple bullish and bearish phases on the 20-minute chart. So just because you have a bullish phase on the 20-minute doesn't mean you'll have a bullish phase on the 2-hour. Like during this time frame, a bearish leg, let me see if I can find this over here. This bearish phase right in here has multiple upwards and downwards phases on the 20-minute time frame. And this region right here, which is technically a bullish phase on the 20-minute chart, just amounted to consolidation on the 20-minute time frame until you had alignment with the 20-minute time frame and the 2-hour time frame. So once these two cycles came into alignment here to the downside, then you see this expansive drop down. So like when you have mismatched signals on the multiple time frames, a lot of times it will just be like a stopping of that main momentum and then continuation of the momentum once they fall back in line. So where we have like this downwards phase on the 20-minute time frame will probably end up being choppy price behavior and not directionally up on the 2-hour time frame. There's really a lot of ways to use this information with your trading analysis. If you don't have access to all the bells and whistles here that are on the chart, the simplest way to look at it and to bring it into your trading is to look for confluence. Like if you're taking trades on an intraday time frame and you're seeing on the charts here that like multiple forecasts that are suggesting a bottoming in the cycle, then during this time frame I'd stop really looking for short trades. I'd be waiting for setups to potentially the long side, or I'd switch to a trading strategy that is just playing intraday ranges, because you can see that like during this transition, there's just a lot of choppy motion on the price charts. So like during the tops and the bottoms, I'm less looking for directional trades, and I'm really focusing on like mean reversion or range plays. If you do have access to all the private indicators and things, it's still used in the same way, looking for confluence to take a signal. But you can see here on the 2-hour chart, like we've entered into this like bottoming phase with multiple cycles, and then you have alignment going up here on all the last couple of days worth of cycles. So the RSI, as you can see right here, it has the top end that's moved below the midline, and we have bullish divergence trade signals all being signaled on this candle right there. So at this point in time, I'm more likely to trust this signal and take the entry because the cycles are showing that they've been bottoming out over the last couple days and are all in alignment going up for the next couple days. So I would potentially expect price continuation to the top side and my targets to be hit more likely than not. At the same time, you can do the same thing on the smaller term time frames. Like we're looking right here in like the same window of time on the 2-hour chart. Like right over here, we have RSI in an ideal position for a long trade with bullish divergence signals, and you have cycle alignment on all the models. The model there, the model here, the model there. They're all going up during this time frame, so I'm more likely to take this signal over any other signal. It didn't come during any good cycle alignment on the bottoming, which really occurred right here. But like still we have multiple days worth of forecasts saying that pricing will be going up. As a final note, it is possible for you to make a copy of this chart. Like that will be an option to save a copy to your account. But in doing so, you won't have access to the updates that I do every single day. Once you save it to your account, then it will be yours to manage, and you won't have any of the new follow-on information. So ideally, what you should do is just bookmark the link on your web browser and come back in to view it whenever you want to start trading for that specific period.